Hello everybody, it's Jamie Powell here with Powell & Associates Private Wealth. I just wanted to reach out to you today to give you a special market update in regards to the US election and the current market situation. On days like today and tomorrow, it's important to remember to focus on your long-term objectives and stay disciplined. It's time in the market, not timing the market, is what really builds long-term wealth. We did see some volatility yesterday in the market, both before and after the US election. This has been widely anticipated for many months, regardless of the wide range of potential election outcomes predicted by forecasters, and no matter how many days or weeks it may take to settle this current outcome. One thing forecasters agree on is that the election-related market volatility will be transitory. It'll be temporary. In the coming weeks, investors will have a clear idea of what U.S. policies, taxation, trade, stimulus will soon look like. Until then, uncertainty may remain a headwind to markets and a catalyst for this volatility. It's worth remembering that the prevailing expectation of the capital markets reaction to Donald Trump's election in 2016 was spectacularly wrong, and the market's initial knee-jerk reaction reversed course quickly and dramatically. I think COVID is something that is also weighing on the market, and the number of infections continues to grow, and it is making a bit of an impact on the economic activity. I think the keys to the COVID piece is going to be the further restrictions of activity and the amount of stimulus that will be coming from the governments. While these factors are subject to uncertain political climate, a lot of people do agree that we know more about the virus now than we did back then, and the restrictions can be targeted and less disruptive than the shutdown that we had experienced earlier in this year. When we also take a look at earnings, and when I talk about earnings, I'm talking about corporate earnings, this is the key to long-term outlook. We have seen a V recovery in the global growth, and we're almost complete. Many economic measures such as the GDP in China, Canadian housing, US retail sales are at or slightly above what their pre-COVID highs were. So this is something that as we take a look moving forward, growth will inevitably start to slow as the pace of the rebound continues. There is some talk about a double dip slowdown, and this can't be ruled out. Although this is something that corporate earnings have been extremely resilient this year, and I think this is something that if we look past all of the short-term noise, profits will continue to drive prices as they always have. Two things I want to focus on today. First one is trying to time the market is extremely difficult and dangerous. Don't do it. Whenever you sell an investment, it locks in that loss, which was originally just on paper. Waiting to confirm you have seen a bottom usually means missing out on a significant recovery in the market, and this can be extremely dangerous. The second thing is that the stock market tends to go up over time. Markets on an annual basis are up 70% of the time, and sometimes in mid-year we can see things drop, but also finish in positive territory. This is the key to having a solid portfolio and a plan in place to take care of your investments and your long-term wealth. If you have any questions about your current plan or your current portfolio or looking for a second opinion, please reach out to me, and myself and my team would be happy to take a look and give you a true, honest opinion. On that note, I would like to wish you all the very best and enjoy the rest of the election.